Hello and thanks for joining me again. After the success of last week's live US futures video, I've got the opportunity for another live video today for the ASX and sectors. So I've chosen to do it live again. We'll see how it goes. I'll try not to make it last too long. And the first chart, as usual, is the S&P ASX 200 index, the XJO. Now, on these first few index charts in particular, it's worth noting these levels here, these two bars in particular, because you can judge then which sectors are stronger or weaker than the parent index. This is the parent index. You can see that when prices dipped lower here 3 weeks back, it's only just gone just below the low of these two bars. Next bar was up. Buying came in on this bar, had the highest volume for a couple of months, 7 weeks, and a push above the high of that bar would probably be a significant push. There's likely to be some resistance in this level here, but the next level above is up here. This is the next level to watch. If this level here gets taken out, which it looks like it might at the moment, given any sort of favourable trading conditions, we should get back above this level next week, and there'll be a period of time that's required to absorb any supply that's coming from this area, and gives a reasonable chance for a push up here if conditions remain favourable. Okay, the next chart is the mid caps. Now, first of all, here's those two bars I mentioned. You can see this market dipped well below these bars. The parent index only just pushed a fraction below, like this. This market's pushed well below, so it's a little weaker. The next bar was up, so there was some strength shown there. It also shows that buying was coming in on this bar, similar to the parent index, the highest volume for 7 weeks. So there was buying on this bar here, and an up bar in response helps to confirm it. There's been a test for supply this week, and prices banging up against this resistance level now. Similar to the parent index, there's likely to be some supply drawn out through this period here. And if price can get above it, this is the level of interest given favourable trading conditions. The small ordinaries. Now here's these two bars here. You can see price is closed well below it. There has been buying on that bar, there's no doubt. The close well off the bar's low, next bar up. But look how much weaker this market is compared to the parent index and the mid caps. The whole bar is completely below these two bars' lows. And price isn't up at this level like the other two markets or just pushing above it. It's still trading below. And there was two up bars on the other market, and this week's traded lower, albeit within the range of this bar, so no serious damage has been done. Volume was increased but still below average, so selling pressure wasn't overwhelming. It's just this market is trading a little weaker. This is the small ordinaries. Here's the level above, similar to those other markets, and there's not likely to be quite as much resistance or absorption required in this market here. This bar doesn't stretch all the way down to this level like the other two markets. We'll have to wait and see. But you can see how much significantly weaker this market is compared to the two larger sector and indexes. Now we've got the XXJ, this is financial sector. Now this bar and this bar are the two we've been marking on the other markets, but we'll just mark this one here because it's clear. Look how much the market is further away from those levels. It's way stronger. There's no doubt about it. And this bar in particular, it's got a much narrower spread, still on the highest volume for nearly 2 months. That was strong buying there, an absorption bar in response and an up bar this week. Price is above that level we've been marking on the other markets. It's popped its head just above. There is likely to be some resistance in here. And the interesting level is probably here, or the little zone in between. So the 7600 level on this chart. But this is a much stronger market than all the other charts so far. Far stronger. It's hardly even come down and challenged this level at all. Next market's the metals and mining. I choose to use this for the miners rather than the materials, because the materials include a whole lot of stuff that isn't mining. And what I'm really trying to do is look at the miners in this. So I don't use materials, I use metals and mining, and that's why. Okay, put some lines on this chart. This is the lows we've been marking on the other chart. You can see price came down, closed right at the level, next bar up, and this market's already trying to do some absorption from supply that might have been trapped in here. So that's a positive, and the market's trying to move higher, and most likely why prices closed well off the highs this week. There is supply to be drawn out from this level here. So it's unsurprising that markets closed off its high, and I wouldn't pay too much attention to it. You'll probably find next week that there'll be a test for supply early in the week, and if not too much supply is drawn out, price will push higher in response. If extra supply is drawn out, you might find a deeper pullback, more like this, and come back to the safety of this line down here. And that could happen during the week and pop back up again too. So we'll just have to see how much supply is drawn out next week. I would expect a test for supply early, and then the market will respond depending on how much supply is drawn out. Next market's gold, the ASX gold sector. When price popped below this level, there was always going to be a bit of damage done. You can see price came back with a wide spread, searching for buyers on the highest volume for the same 7 weeks. Next bar was up, but only on low volume. There hasn't been any serious buying in this market since it sold off. The break below this level here was significant. It was holding on really strongly up to here, and it kind of tried to hold on there and not break. But then when it did break, people got out and they haven't really come back yet. It's a bit of wait and see. This week was a little bit promising. Prices tried to move higher, but volume was only low this week. So there was no real oomph, there was no strength, there was no demand, not enough demand to maintain higher prices. And that's let the market just float down into its close. It is comfortably within the range of this bar, previous bar, so no serious damage done, but not a great deal of strength being shown at the same time. Next bar is energy. This market's been very strong. You can see after prices raced higher here, then after a little bit of consolidation here, Price stalled out a little bit through here, but really it hasn't broken down at all. Look how high the market is consolidating. The higher up in a range the market consolidates, the stronger it is. So if we're looking at this bar showing us the last push higher, a 50% consolidation is still considered strong. Anything above 50% is really doing a good job, considering that even if price comes all the way back to the lows and then recovers and goes higher, it's quite acceptable. So for the market to be consolidating right up at the highs of the last serious up bar, it's just showing you how strong this market is. It really is seriously strong. And even if price pulled back on a shakeout or something like this, it wouldn't hurt the market at all. It would have to really come down sharply with higher volumes to really cause any damage at all. This market's strong. Whenever price dips lower, there's enough buyers in the market to offer support, and it continues to maintain its level right up high in the range. Next market is healthcare. Healthcare market has been in a accumulation pattern for quite some time now, and it's really starting to wind itself up and coil itself up like a spring. This week saw spread narrow considerably on an increase in volume and above average. That was just straight buying. This has been an accumulation, and I expect the market would have probably liked to have attempted to break out or have broken out by now, but trading conditions just haven't been favourable, and it's been forced to continue sideways probably for the last month. This bar looked like price could head higher in response, but instead this week price has come back. It's traded within the previous bar's range for the whole week on an increase in volume, and spread has narrowed considerably. This is a market really serious buying this week, and I would expect the market to accelerate higher. It's waiting for a catalyst, or it's waiting for favourable trading conditions. If it was to break down from here, it would be pretty bad, because a lot of this buying would be dumped, and that would cause a really bad widespread down bar. I don't think that's going to happen. I think there's lots of support in here. There's been lots of buying, and the market is going to respond positively at the right time. And this week's bar suggests that even further buying was drawn out. And the last market is the industrials. The industrials have been similar to the healthcare sector, but they have actually broken out. They broke out here when there was a bit of weakness recently. The market's come back, tested the breakout, and then accelerated higher. So the market has tested the breakout. This week made a weak attempt to push higher here, but volume was really low. Demand was low, couldn't maintain higher prices, floated lower for the rest of the week. Still closed mid-bar, comfortably within the range of the previous bar. So no serious damage done, just waiting for the right time. There might be a further consolidation within this range here, within this range, until the timing is right. A break below this level would probably be significant, would probably be weak, but I don't think that's going to happen. I think the market will consolidate in this level here, or break out further if the opportunity is presented. That means if trading conditions are favourable. Okay, we'll just flip back. It's the parent index again, the XJO. You can see this is the level we were talking about. Price only just dipped below it, and the market looks poised to challenge this level next week, given any sort of favourable trading conditions. the mid caps were weaker than this market, the small caps were much weaker, and the financials were much stronger. They're up here. Okay, that's my lot. I raced through them as quickly as I could so the video doesn't drag on for too long. Let me know in the comments if you still like this format. I'll do it when I can. Thanks for your time. See ya.